Well, we are finally on the platform, and let me show you and explain the moment we need. It is precisely the analysis that will give you a very good, so to speak, incentive to trade here, because with this analysis, usually no one ever makes mistakes, as it is very simple and allows for calm trading. This is a small strategy for you, so let's get started right away. First, we will begin by finding a currency pair. I have already chosen it. We have the outcut OTS. You will be looking for similar pairs, meaning a currency pair that is roughly the same or a stock. At the moment I have the outcut OTS open because it is very convenient and fits this strategy. And how do we understand that we need the very currency pair that I will show you now? First of all, I will immediately turn on the zigzag, because it will be much clearer this way than explaining for half an hour what trend we need. Here, what we actually need is a trend that goes approximately like this. Now I will show you how. First of all, we have a 15-minute interval. I turned on the zigzag, and what do you see here? If we go back, we see that we have a very strong upward trend. It gave a very good impulse at that moment. Because of this, the trend is still rising, breaking its previous maximum each time. And we need a trend like this, either a very strong upward trend or a downward trend. We have an upward trend where the price reaches a certain maximum, reverses, then starts to gradually compensate for it, breaks a new maximum here, and thus creates new maximums. That is, we need a trend where we have either a very strong upward trend or a downward trend. That is, when the price goes very well up or very strongly down. In this case, in this currency pair, I have a very good upward trend for the OTC pullback. And what do we take here as the second point? We take the moment when the price reverses. Here it reversed and reached this bottom. Let me even mark all this with a rectangle. I'll quickly place it here like this. This is all needed so that you can see it all. That is, it reached this level here. Since there was a new maximum here, it reversed, and it seems that a trend reversal started here. But even though it went here, it did not reach the previous bottom. This is the maximum, which is marked as the minimum here. Therefore, it did not break through it. Because of this, the price started to compensate itself here. It reached this point. Here it is. Let me also place horizontal lines to make everything clear. I'll place it here. And I'll also place this maximum here as well. Right here. Here we have two horizontal lines. They are needed so that you can clearly see where these maximums remain. That is, the price reached here, compensated itself, stopped right here, and again there was a reversal. But a very good point that we see here is that this point, of course, could not break through the previous point. Because of this, we will be able to bounce off it well as well, because here we already understand that the price compensates itself. So to speak, it reverses. And here we see that this horizontal line remains below this line. Therefore, we have a very good trend for us here. So we can calmly open in one direction or another. And I will show you which direction now. When we need to open, when we have found the trend, when we have done the analysis and understood how our trend is going. And if you have a situation similar to mine here now, what do we need to do? We are already sitting on a 15-minute interval. I apologize. And we switch to the 5-minute interval. Why do we need this? To see how our candles are moving. Here we have the last 3 candles so far. One of them is active, this 4th candle. We are not looking at it for now. We are not touching it. We look at the first 2 candles. The first one is a small bearish candle. That's already good. The second one is also a bearish candle. A large bearish candle. 5-minute. And the third one is also a bearish candle. So here, most likely, even with such candles, there will be a 4th candle. Most likely bearish, because we already have the 2nd candle. And the 3rd one has also confirmed itself. So, let's go ahead and I will try to open several trades here. I will open trades of $75 each. Let's take them for 3, 4 and 5 minutes here for a decline. I will open these 3 trades. Why? Because we can already see on the 5-minute interval, on the 5-minute candles, that we have the 3rd bearish candle. Although it is small in volume, I will still try to open here because we have confirmation that there will likely be a price pullback again. If it doesn't happen, then we will just wait for the 1st and 2nd bullish candles here. And from it, we will push upwards. Because in this case, we will likely break through this maximum where we place the horizontal line. Therefore, We are not in a hurry, trading carefully, not setting billion% from our balance, but opening gradually. That is, I opened 3 trades. Of course, the percentage I took is still quite large, but don't pay attention to that. We open at 1-2%. Here, this is already after the analysis on the 15-minute interval. That is, we looked at how our trend is going. What did we take from this? We took that the price here, to put it simply, is going up. It turned around, couldn't go any lower, so it went up again, already above this point. Therefore, we are already looking at the candles here, how it is going. If there were a bullish candle forming here on the 15-minute instead of this bearish sideways movement, then yes, I would likely try to open for an upward movement here. But how to give yourself 100% confidence? Well, okay, not 100%. 99% confidence that your trade is going in the right direction, to open it in the right direction, either up or down. On the 15-minute interval, first, look at the candles. First, what did we see here? A sideways movement. That's it. We noticed that. We noticed how the trend is moving. We noticed that this level has been broken. Therefore, we are already thinking in our heads that there will likely be a reversal here. Next, it will go down again and at some point will turn around. But this is still not certain, so we switch to the 5-minute interval. Let's look at the candles. The first candle is bearish, the second candle is also significant. This is very good, by the way, that we have a significant bearish candle, and the second and third also confirm it as a bearish candle. So here we can add a few trades for a downward move, but we also don't rush and don't open a billion trades of 500 each on the same position. So here we have worked everything out clearly, looked at how it was on the 15-minute interval, checked the candles on the 5-minute interval, and only then we slowly start to open positions. Now our 5-minute candle has closed. The new fourth candle, if we go from here, what do we see here? We see that we have a bullish candle preserved, therefore most likely another one should form here. On the first trade, I of course made a profit, but the situation is such that here it will likely give us 2 losses, because we have a small bullish candle appearing here. So what are we waiting for here? What are we expecting? We are expecting the second candle here. That is, we are not opening positions now. We are waiting for our 2 remaining trades. And only after that will we look at how the candles will behave here. If there is a bullish candle, we will open positions for an upward move, because a sort of dip will be created here from which we can bounce upward. If there isn't one, and there is a significant bearish candle here, then we will go for a downward move. I hope everyone understands everything, because I am trying to explain as thoroughly as I can, because of the analysis we conducted here, how to understand where it is better for us to trade, and how to assure ourselves that we are indeed opening positions correctly. Therefore, I hope I am explaining everything to you correctly and briefly. I apologize if you still didn't understand, but here let's focus purely on the 5-minute interval, and I will show everything now. By the way, the second trade did not go through, and I mentioned this just a minute or 2 ago, that it most likely won't go through because a small bullish candle was created here, and our positions are not that good, because it is best to open after the second candle on the 5-minute interval. If we had opened like that, we would have likely already made a good profit, but we opened here. And what did I say at the beginning? I said that if they do not go through and a bullish candle is created, followed by another one, then we are waiting for a breakout of this horizontal line, this maximum. If there is no breakout after our second trade has closed, what did I say? I said that if there is a large bearish candle, it is already slowly forming and there are 2.5 minutes left. If there is a large bearish candle, we will add to the downside, but we are not in a hurry. I will also repeat this again because many are rushing. We are just waiting here for it to be fully formed. That is, these seconds and minutes will remain at 0 until the candle is ready. Only then will we open, so we are not in a hurry, we relax, watch the trend and keep an eye on it. We can also switch to minute candles. Look at how it goes here. And here we just relax, watch, because we trade carefully without rushing. And in this way, we can increase our balance well. So far we have one trade that went into the negative because a bullish candle was formed here. The other 2 trades have already gone into profit, that is, the 3-minute and 5-minute trades have gone into profit. Right now, we will most likely add more. I don't want to drag out the video because I have already explained the basic points already. I showed how to trade, I showed what candles to expect, and I advise not to turn off this zigzag at all for beginners because it will be really useful. Well, in my videos I show everything else with the zigzag so that you can see everything clearly. So we already have a substantial candle forming, so I don't want to drag out the video. I will add more right now. I will add for 1 minute and take 2 minutes. 2 trades like this, I will quickly take them and just show. So that's it for now, but let's also, well, no, I won't add on for longer time frames, so I will just open these 2 trades here. Let's imagine that we are forming a substantial one right now. We open for 2 to 3 minutes or even 5 minutes. We just wait for our trade. But in such a trend, by the way, many people make mistakes regarding timing, how long to open, how much time to set. In such a trend, when we have an upward movement, we analyze here and understand that the price compensates itself. Here we don't try to open for 10-15 minutes, don't try to open for such long times. It's better to trade on shorter trades. Well, mine didn't go through because I opened not at the moment when the candle completed itself, but at a moment when there was still a minute left. But this is all for the video, because I still have a video, and it's already getting quite lengthy, so I'm trying to show you everything faster, to shorten it. Here we have a pullback, and at this moment we would wait further, because we haven't formed a substantial candle. Because we haven't formed it, if you had opened here you would have also gotten 2 losses. Therefore, we watch the candle until the very end. We looked at the 5-minute candle. It formed a substantial one. Well, that's it, we completed. I'm just showing you here, meaning I'm repeating all of this to you now because there are people who start saying, oh, your trades didn't go through well, you're just some kind of nonsense. Loser, you don't know how to trade, so why are you showing us all this? I'm showing you all this to quickly demonstrate, as the substantial video is getting large in size, in gigabytes, and I don't want to drag it out too much. Because I've already shown everything else, we still had these 2 trades go through, and you could even say it returned our previous trade. In general, what needs to be done here is that the candle pulled back, the 5-minute one formed when it finished here. It didn't form a substantial candle here. So we also wait for the next candle to see what it creates. Here we have a trend. If it's bullish, we will start opening positions slowly upwards, but we also don't rush, because what if we have a small one? We will wait for a second bullish candle and then open on the second. If after such a bearish candle a substantial bearish candle forms, then fine, you can add here. But we also wait for the end of the 5-minute candle. Well, basically that's all. I've shown you everything in detail, how to analyze which trend is better to find, under which candles to open. And by the way, I've slightly deviated from the topic of time. How is it better to open for longer terms? I advise not to take it for longer terms. Why? Because on the 5-minute interval, we looked and found a good moment. For example, now we have formed a substantial candle. All this time is already gone. And we have formed something like this. How should we open here? We open for 2 minutes, 3 minutes and 4 minutes. Literally for a maximum of 3 trades. You can take 1 trade or you can take 2. That's it. 3 trades, 2, we opened 1 trade. That's all, it's enough. We stopped. Next, just watch, keep an eye on the trend. Well, that's all, friends. Thank you all for watching this video. I hope I explained everything thoroughly. If anyone has any questions, please don't hesitate. Ask all your questions, either in private to me on Telegram. The link is in the description, in the comments, or just write your opinions and questions directly in the comments, and I will respond to them and also try to explain everything to you in detail. So, thank you all once again for watching this video. Have a great day.